Hey everybody, welcome back to Ryan Makes Sense, where we talk personal finance, investing, and chart analysis. Today we are looking at SentinelOne, ticker symbol S. They did have earnings yesterday, I believe. I do like to produce evergreen content, so whether they beat or miss on earnings, this video is still relevant. We're going to look at a few things. One is this current stock price of around $20, $21, $22 valid for this stock. Should it be overvalued or undervalued? We're going to run my desired price target calculation to see what the stock could be worth. We're going to look at some bull side price targets, some bear side price targets, see what institutions and hedge funds are doing, and also look at the balance sheet. Without further ado, let's go ahead and click the subscribe button, and we're going to jump on in. So I'm on the daily chart, just observing a couple things. So for SentinelOne, our magnets are kind of going to be gaps. So our first gap right here up to the upside is $25, around 25 to 26. So that's our price target number one. And then price target number two is going to be 29.83. And you can see right here, this is our long-term resistance as we've not been able to close above and continue onward. So again, if they have good earnings, we could see 25, 26 to fill this gap and move up here. It did look like the stock did do a healthy move, which was filling this gap. So the stock made a nice move off of our support here and literally went up 100%. Yep, 100%. And it came back down and filled these gaps. So a gap down here, but you can see it filled it. A gap down here. So is this stock going to come back up and fill it? We don't know. But the stock just recently came back and filled this gap. Does that mean the stock is ready to continue upward? A lot of times, sound companies, when they start their move upward, they close gaps to not leave them opened as they move up. Not always, but often. Do we have any other gaps on the downside? Right here, possibly 16. $16, we'll come back to that one. Okay. So I'm not seeing any other gaps except for the $16 one. So right here is where the stock would need to come down and close to just close that gap. So on the downside, if the stock has bad earnings, I think the first step is going to be, well, we do have some support here. We do have support here, clean resistance, support, support, resistance, resistance, support. So our first target to the downside is going to be $20.44. Next is going to be 18-ish, $18.10. And then we also do have this gap at $16.18. All right. So those are our bull and bear targets if the stock does go up or down on earnings, or if it did, sorry, because this happened. I'm reviewing this before earnings. And as you can see, it's in this nice little channel. Now, if it does fall through, again, ideal support would be down here. All right, looking at some indicators, the strength is almost in the bulls' favor. It's at 46. We do want to see this above 50, 55. The momentum kind of looks like it's coming back down, but honestly looks like it could keep moving upward. Money flow has only been going up for the last year and a few months. You can see it took a break here for the last 3 months, but it has a hitch up. So money flow could be coming back in. We'll find out. Relative momentum indicator was scraping the bottom of the barrel for the longest time, and it's kind of looks like it has a lip down right here, but again, kind of hard to tell. It's not really in favor of the bulls. However, it did make a wonderful comeback here. We could see some consolidation again within here while it rests and creates a nice base before moving upward. So we'll see what happens. Looking at our sales, this is just an amazing stair step. This is exactly what we want to see. The EPS has taken a long time to reverse, but it is slowly starting to reverse. It went from, these are all negative, so negative 0.27, 0.41, 1, 1.36, 1.15, and hopefully turning the corner and going up and around. The shares outstanding are kind of everywhere. We have 285 million shares back in 2020. Now we're showing 304 million for 2024. The current shares outstanding are 259. So again, mixed bag, no real red flags there. They are not profitable, but their gross margins are 70%, which is fantastic. They have very little debt. Their quick ratio is over 1. So I'm very excited to see what institutions and hedge funds are doing. Thank you for reminding me. I'm going to go ahead and let that load while we run our calculation here. So this is my desired target price calculation. We take the market cap, we add the income, but in this case, we're minusing the income. 338,690,000. Yep. But we do have sales of 621,150,000. All right. And this calculation was born, I used to work at a micro cap company. Every 100 million in sales was equivalent to $1 in stock. I added in the market cap because that's when you start to have big money pushing things up or down. So yeah, we're gonna add the cash, take out the debt, and go quarterly. Okay, so this is in USD. A lot of insider selling. Mark Peak purchased $223,000 worth. The CEO has just been on a selling spree. It's a lot of red. Okay, so they do have plus 987,220,000 in cash, which is good. Total debt, total debt. Again, they had little debt, so minus 18,240,000. All right, total assets is 2.3 billion. Total liabilities is 700 million. So assets dwarf liabilities at least 3-to-1, which is fantastic. For a company in this position not being profitable, that is pretty amazing. Yeah, not much to say there. Then we're going to take this and divide it by 259,580,000. So this is saying a stock price of $31.86, which is pretty dang near this upper support, or I'm sorry, resistance in this case. Analysts have this at $30.06. This is about $1.76 less than mine. So our calculations are pretty close. Obviously they do it in a different way than I do, unless they copy me, which I doubt they do. So we do have our desired target price, which is in line with this. Needham is right at my target price. B of A a little bit over. BTIG right at it almost. Bernstein, Susquehanna under. So that's kind of where we're at with the price targets. Again, if they have great earnings, we could see 25, 26, 29. Bad earnings, $20.44, $18.10, and $16.18. If it does get down to $16, I do expect a very bullish candle here where we have a lot of selling. If the stock does come and close above $17.95 by the end of May, I am definitely going to be adding this one individually to my portfolio. As long as as long as it is a bullish doji with, again, demand exceeding the supply that was just released if people decide to sell. That's just me personally. Don't copy me. Okay. Institutions own 56.8%. That is old data. The reason why I say it is old data is because FinViz does not update regularly. New, remember 56%. New, we're gonna round 57 because 56.8. So new data is 75. About an 18% increase in ownership. This is like almost all-time high ownership. Vanguard added about 7%. BlackRock added 15 million shares recently. Insight Ventures sold about 3.5 million. Vanguard purchased about 1.7 million. Tomer Weingarten purchased about 180 million, and then BlackRock 15 million shares. So, pretty cool. What is Renaissance Technologies doing? Because they are always early to the party, and there they are. They actually decreased their position recently, about 10%. So 157,000 shares. They're usually like spot on. They're in early. A lot of the stocks I get into, after I see them run nicely, I always see Renaissance Technologies there. That's always a telltale sign that something is a brewing. So, yeah, that's my opinion of the stock. I don't have a direct ownership. It's not in the S&P. So again, yeah, it could be turning around. Yeah, we're gonna see how earnings goes. I feel like either way it goes, we're gonna be within this channel here, or we might take a nice little dip, which I think would be a good opportunity. So for me personally, not for you, don't use this as advice. If you made it this far, thank you so much for watching. Consider subscribing, it really helps me out. Leave a comment, tell me my calculation's crazy, or if I'm absolutely wrong because I don't understand their products. Whatever. I look at the numbers, baby. Have a great day.